Hi guys, I thought I'd do a video to go over what might be feasible options to invest during a recession environment as I'm talking in October 2022. So I'm just going to go over a few funds and a bit of the kind of hypothesis around why I'm potentially looking at these funds in this particular macro environment, and hopefully it can be helpful to your portfolios, either reweighting or if you've got some cash to invest. Again, just as a disclaimer, this is not specific financial advice, and these opinions are my own. So, firstly, we've got, you can see on the screen, Pacific Horizon Trust. This is actually a GBP only option done by Baillie Gifford, large UK fund manager. There you can see the performance. Why I like this fund is if we go down to the breakdown of the areas. One is Pacific Horizon, so obviously it's Asian. A lot in 24% in the Indian economy, a lot in China as well. I spoke a lot about China and how I think that's still going to grow, although we have lockdowns in at the moment in China, a slowing economy. I think the world's become too reliant on China. And also how the CCP has managed to gain power. It's got quite good control on that. So I don't think it'll let it go long term because the CCP is in power because of people's lives, sorry, growing and getting exponentially better. So I think it's going to try and expand that growth, and we'll see as the party conference comes just before I'm speaking. But going into the Indian side, what we see here is on the GDP per capita is 2,100, just over in 2019. So if you're investing in a company, especially if you're investing in an area, sorry, which you're looking long term, so you may have a 20, 30-year time frame. Somewhere like India, where it's got a low GDP, it's growing at around 6.3%. This is all Focus Economics data. I would be confident in that area, and conversely, that equity market, that it's going to grow in the long term. So just having something in those sectors. Again, yes, it is an emerging market, so you do have regulatory issues, political issues, particularly in India, where there's a lot of corruption, and also it's a big economy to manage. But just from the pure basics, it's at a very low base point. And if you're investing for kind of 20 years, 10 years even, you'd be quite positive that this area is going to grow. And conversely, the equity markets. Again, if we look at where it's invested as well, I just want to go over a bit on a few other ones. South Korea, it's a bit more developed, so leave that for the time being. But you've got some good companies in South Korea, some conglomerates like Samsung that it's invested in. The other one is Vietnam. So we go down to Vietnam. Again, you've got a population of 95 million people. It's quite a large population. Also, you look at the growth of what it's done in 2015. I've always gone on to Vietnam to say it's a carbon copy of what China is, just a smaller version. And 20 years later, just lived in Vietnam, it's a great area where it's rapidly going through change. Again, it's kind of hard to argue against the ideology that in 20 years' time that Vietnam won't be in a better position than it is now. It'd have to take something extreme from that. And again, if you look at the government's growth figures, 6 to 6.5, it's a lot more than what you're seeing in a lot of the developed markets. And finally, want to go on to the Indonesian market. Now, Indonesia is one that often gets overlooked, especially in the Asia region. But look at the population, 267 million, one of the largest countries on the planet. You've got also a relatively low GDP per capita. So if you look at places in the region, Malaysia's GDP per capita is around 10,000, Thailand's around 7,000. It's got a lot of way to grow before that comes into place. Again, you're looking at 5.1% of growth, a lot more than what you would see in the developed markets. And also, as looking from the macro perspective, we've seen the war in Ukraine. Maybe don't want to be diverse. Put in Europe right now. The US probably looks a bit of a better option, but still equity markets are quite high. This is a good diversification for that, where you can look for long term. So the Baillie Gifford, Pacific Horizon, Pacific Trust, if we go look at the performance, again, it's close ended. So you can actually buy it at a discount to what it's at, and quite right now it's at quite a low discount, 7.4% as of the 6th of October. Charge is relatively low, 0.75%, and there's the performance considering against the benchmark. You see it's outperformed its benchmark quite considerably. The next one I want to go into is, again, if you are looking to go into that, it is more for the ones that can take quite a lot of risk, because it could be quite volatile, especially in the medium term, and have a long-term investment time frame. The next one is Fundsmith. Now, this probably needs no introduction to a lot of people. Fundsmith, it's one of the UK's most popular funds. So why have I picked it now? Again, it's quite simple, because in an inflationary environment, you want to look for companies that have good profits and good margins. And one of the investment philosophies of Fundsmith here is high quality businesses that have a competitive advantage or difficult to replicate, businesses that do not use leverage to generate returns. So therefore, it's kind of, if you've got a lot of debt, it's compounding it in a recessionary environment. It's harder to pay back because of the interest rates. So these are some of the companies that you would want to look for in a recessionary environment. Basically, they're solid companies that people are still going to buy because of either brand awareness, etc., or use because of the defensive, and they're hard to replicate. One that I'd like to kind of go on, quite a controversial one, Philip Morris. One, if we look at the tobacco side of it, I don't think many people are going to go try and compete in the tobacco space with it, just because of the regulation that comes in to it. And also it's kind of diverting its business into more healthcare, ironically, with that as well. And that could be said with L'Oreal for brand loyalty. It may be affected as it gets squeezed, but I think it's got a good brand loyalty on there. So that's some of the options that I'm personally looking at. Clients, if they're looking for long-term horizons and how to look into particularly the equity market now, I do think it is a better opportunity to get into than what we have seen, especially in the last year, where equity is quite holding high. I think some of the downsides that you have is there's still a lot of uncertainty. Could have inflation for longer. No one really knows what's going to happen with the war as I'm speaking. So there is that. So just take that in mind if these are for people that can tolerate the risks. I hope you found this somewhat useful, and you can hopefully use it to reweight in your portfolios and use in your portfolios. If you've got any questions, feel free to email me at info@investmentforexpats.com.